Hello everyone. This video presentation is in continuation on our discussion of income taxes under International Accounting Standard number 12 or Philippine Accounting Standard number 12. In continuation pa rin ito ng deferred tax liability. This is part 3 of 4 videos about deferred tax liability. Anong objectives natin sa presentation na ito? Continuation ng accounting income is higher than taxable income. The transactions this time is related to expenses. Ano-ano yung mga treatment ng expenses kung saan nagiging mas mataas yung accounting income for the current period versus sa taxable income. Number 2, ano-ano ang mga other taxable temporary difference. And number 3, what is tax base of an asset and tax base of liability. Okay. Sinasabi natin in the previous videos na kung kailan nagkakaroon ng deferred tax liability in which accounting income is higher than taxable income. Expenses and losses are deductible for tax purposes in the current period but deductible for accounting purposes in future period. Sa madaling salita, yung expenses at saka losses dideduct na sa pag-compute ng income tax, pero pagdating sa pag-compute ng accounting income ay hindi siya pa dinideduct. So ano-ano yung mga transactions na letter A, accelerated depreciation for tax purposes and straight line method depreciation for accounting purposes. Pag sinabi nating accelerated depreciation, ito yung some of the years mga double declining in which sa unang years ng asset ay mas mataas yung deduction ng depreciation expense. Whereas a straight line method, ito yung prorate lang natin yung depreciable amount ng asset over the term, over the life of the asset. So, at the beginning of the current period, kung kailan bumili yung property, depreciable property, yung company, at saka kung ang for tax purposes ay gagamitin yung accelerated depreciation. So, mas mataas yung depreciation expense na nagre-resulta ng mas mababa na taxable income. Kaya yung accounting income niya ay higher for that certain period. Now, letter B, development cost may be capitalized and amortized over future periods in determining accounting income but deducted in determining taxable income in the period in which it is paid. So, ito naman yung development cost na that for accounting purposes, ikakapitalize mo siya kaya medyo maliit yung effect niya sa accounting income dahil yung i-record mo lang na amortization is for that current period. Kumpara kung for income tax purposes, allowed siya i-deduct lahat ng nagastos, lahat ng binayaran mo na development cost. So, magiging resulta, yung expenses mo sa in computation of taxable income mas mataas, so mas mababa yung taxable income mo kumpara sa accounting income for that period. Letter C, prepaid expense has already been deducted on cash basis in determining taxable income of the current period. Prepaid expense for tax purposes, kinaltas niya lahat, pero for accounting purposes, prepayments pa siya, asset pa siya. So, wala siyang masyadong effect sa income. Kaya mas mataas yung accounting income mo kumpara sa taxable income. Other taxable temporary differences. Asset is revalued upward and no equivalent adjustment is made for tax purposes. So, nirevalue mo yung asset mo pero for tax purposes wala siyang effect. So, nagiging mas mataas yung income mo so ang carrying value ng asset mo mas mataas kaysa tax base. The carrying amount of an investment in subsidiary, associate, or joint venture is higher than the tax base because subsidiary, associate, or joint venture has not distributed its entire income to the parent or investor. Number 3, the cost of business combination that is accounted for as an acquisition is allocated to identifiable assets and liabilities acquired at fair value. What is tax base? This is the amount attributable to the asset or liability for tax purposes. Tax base is simply stated, ito yung amount na kaakibat sa isang asset or liability. Tax base of an asset and tax base of a liability. A tax base of an asset is the amount that will be deductible for tax purposes against future income, while tax base of a liability, the tax base of liability is normally the carrying amount less the amount that will be deductible for tax purposes in the future. Examples: the tax base of an asset, if an entity has appropriately capitalized 1 million as software development cost, the carrying amount of the asset is 1 million for accounting purposes. However, if this amount is allowed as a one-time deduction for tax purposes, the tax base is 0 because the entire amount is expensed in the current period. Tax base of a liability, if the entity has recognized an estimated warranty liability of 500,000, the carrying amount is 500,000. However, an estimated warranty cost is deductible only when actually paid, thus the tax base is 0 because the estimated warranty cost is a future deductible amount.